Hello everyone, I'm Tarun, I'm founder of Copperx, and today we have Akshay with us. He's the founder of Qiro, which is like on-chain private credit marketplace. So thank you so much for joining our podcast today. And I would like to start with your introduction and what you're doing at Qiro.
Yeah, I think first of all, thanks a lot for hosting me on your podcast. Like as far as the introduction goes, I'm Akshay, co-founder and CEO at Qiro Finance. So essentially, at Qiro, what we are trying to do is we are solving the private credit space while using blockchain as a technology.
Okay.
So Qiro is basically on-chain private credit marketplace. The secret sauce of Qiro is how do you evaluate the risk associated with these private credit transactions.
Okay.
So essentially, when we started working with Qiro, we realized more than 20 billion worth of volume is already flown on chain. And but if you look at the TradFi setup, the private credit volume, the default rate is around 2.7, 2.8 kind of at a AUM level. But if you look at few of these marketplaces on RWA.xyz, the defaults are in the range of 10 to 15%, which is huge according to industry standards. So DeFi is suffering huge losses like 4x, 5x losses compared to TradFi setup. Then we saw an opportunity that there is something to solve. Our approach is very simple. Execute transactions under the private credit marketplace. Have those models in place, which will help us understand more about how do you kind of assess the risk associated with this private credit transactions on chain.
Okay. Can you try to tell us like what is how do you define private credit for as a layman term?
Yeah, I mean, in simple words, it's like a lending business. But when I say private credit, we are talking about, say, a particular investor is there who is a stablecoin investor.
Okay.
They are looking for, like, say, double-digit yields, right? Right now, if they invest in treasury bills, it's like 3 to 5% kind of APY you can earn. What if there is an opportunity to be deployed that capital in real world? There are real world companies who are looking for loan or a debt, right? So essentially, it could be for any purpose, but what we are trying to do is there are real world companies like lending businesses, payment financing businesses, or corporate credit card kind of fintech companies who always look for this debt raise, and they kind of deploy and they earn additional returns on the top of it. So essentially, private credit, as in like simply you deploy that capital and you earn returns on the top of it.
Understood.
Yeah.
Understood. So, and what kind of like use cases would be there? Like, who will use this particular credit? Is it for, let's say, I think you mentioned like a corporate credit card, right? So how does that work? Like how does the yield get generated from this particular example?
Yeah, I mean, like there could be different use cases, but at Qiro we are specifically focusing on use cases around fintechs. So the
Okay.
fintech could be, like you said, corporate credit card fintech,
Okay.
or a payment financing, cross-border payment fintech, or typical business loan, invoice financing kind of loan, lending kind of a
Yeah.
fintech.
Yeah.
So especially around that corporate credit card fintech. So usually what happens, all these corporate credit card fintech, they have like these settlements to be made at the back end with the Visas and MasterCards of the world who they have
Okay.
partnered up with. And as and when they do the settlement with the Visa and the MasterCard, so they get discounts from them, and that's how they generate revenue.
Okay. Okay.
Yeah.
So I think Visa or Mastercard, they give the yield for blending or settling payments earlier.
So usually it's the other way around. So there are
Okay.
users of that fintech corporate credit card company.
Okay.
So users spend some dollars,
Okay.
and that needs to be settled with the Visas and MasterCards of the world at the back end.
Correct.
So the fintech company,
Yeah.
if they settle that payment with the Visa,
Makes sense.
the Visa gives them the discount,
Makes
and that's
sense.
how they earn.
Makes sense. Makes sense. So I think it will give fintech a chance to like earn more, and
Yeah.
also like at the other end, like Visa, they don't need to like borrow liquidity for a while. Something.
Right. I mean, so one way to look at it is like either you use your own capital as a fintech company
Yeah.
and you do the settlements.
Correct.
Or maybe you take up capital from someone else, like a stablecoin investors who are looking for yields.
Yeah.
So you borrow capital from those
Correct.
stablecoin investor and you settle these with Visas and MasterCards.
Understood. And as a founder, like why did you like how did you come across like building in this particular space? Like what is your background? Like what did you used to do earlier?
Yeah, I think that's an interesting one. So I come with a fintech lending and a capital sourcing kind of a background.
Okay.
So almost spent a decade in fintech lending and capital sourcing. So started my journey with India's one of the early consumer durable mobile app based flexible monthly installment plan kind of a consumer fintech company. I was the first growth hire over there. That's when I entered into fintech lending as a space. And I kept working in the similar space. Like I worked for a lending company which is into SME financing, one of the leading company in India, lending card. Then again I worked for Oxizo, which is again like a sizable fintech company, fintech lending company in India. They are about to launch $1 billion IPO in India, profitable fintech. So closely worked with the founders and got to learn how the lending business works. In my last stint, I was global capital sourcing head for a New York-based B2B marketplace by the name of Fashions. So help them raise debt in US, UAE, and India. So all in all, like I understand pretty much like the capital sourcing, especially the debt side and the fintech lending business. Then the natural move was like what do I do by leveraging these expertise and this experience. And parallelly, I mean like my co-founder Nishikant, he comes with a DeFi kind of a background. He's a DeFi DJ.
Yeah.
So pretty much like we understand both parts of the world, and we used to always chat around. While he was working at a previous stint, I used to advise them on a fintech side whenever companies wanted to use fintech and like blockchain together. So I used to advise them on a fintech side. So we always used to figure out, like or chat around like how things work in TradFi lending, how things work in DeFi lending. So that's how we came together, and we figured we realized that we can do something together.
Okay.
And eventually, like I said, we spoke with like hundreds of these people from the industry, both from a TradFi and a DeFi world. And especially when we spoke with like RWA folk, RWA industry and DeFi lending folks, we realized that there is a problem of adverse selection, and that needs to be addressed. Okay. And that's where we saw an opportunity, and we decided to start Qiro.
And how does like bringing this on chain helps? Like what is the difference between how things work in TradFi and like why do you need it on chain?
Right. So I mean again maybe I can talk about like especially from what we are trying to solve here at Qiro rather than talking global.
Yeah.
So like I said, private credit transactions, right?
Yeah.
So the stablecoin investor giving capital to fintech companies, more or less these are like B2B kind of transactions.
Correct.
Like a financial institution or like a capital coming from on-chain, and that is getting deployed to financial institution in the TradFi setup.
Correct.
So in this use case, what will happen? Even the retail or institutional stablecoin investor can participate in a particular transaction. You pull in that stablecoin capital,
Understood.
and you collectively give that as a debt to a particular financial institution.
Correct.
Right. So many to one kind of a correlation can happen. Many investors, retail or institutional, can participate in the same transaction. Whereas in the traditional setup, what happens? These are all very private, and like only a bank decides to invest in a financial institution, or a hedge fund decides to decide to invest in a fintech. These are all like a one-to-one mapping kind of a transaction.
Yeah.
Second, in the TradFi setup, these stays in like a local particular whatever that country or a region it is. So like usually the fintech who is in dire need of these capital, either they need to have global expertise to kind of go and hunt those capital houses to get the capital, or like just rely on local banks and local funds to get the capital. So this kind of opens up the global capital markets gate as well.
Understood.
So yeah, these are the two major reasons basically.
And would you call Qiro as a DeFi product, or like how does the compliance play a role in the whole picture? Like is it like, let's say even I as an individual I can go and let's say settle or participate in some kind of credit or lending, right, and earn out of that, or is it like a closed system? How does that work?
See, as far as the Qiro's current stage is concerned, so Qiro acts merely as like a tech player, right? So then we work with a third-party service provider or partners who holds the required licenses.
Okay.
So there are multiple actors which might be required. So essentially, there is a vehicle which is set up, special purpose vehicle or some fund structure, and in that the capital will get deployed, and that vehicle will deploy a capital to the financial institution. And people who hold the licenses and regulatory approvals, they will be the ones who will be running these vehicles. So Qiro is pretty much like a tech company right now. And as far as who can participate in these vehicles, so right now we are focusing on institutional stablecoin players only. But in a longer run, idea is if retail and institutional can also participate in that. And these are going to be like steps, like this is going to be like a journey for us. Yeah.
Okay, understood. Understood. So basically, like right now, it's it's available for FIs mostly.
Yeah,
right?
yeah, institutional
Understood.
stablecoin capital.
Okay, makes sense. And like, so I think the way it helps is like it's a global from day one. That's the biggest advantage I feel.
Yeah, yeah.
So I would like to ask you like how Qiro can be useful for companies like Copperx, where we are building a stablecoin neobank, right? So like, can you give some examples of that?
Right. I mean, like it's pretty much complementary when it comes to a on-chain private credit marketplace like Qiro and stablecoin neobank like Copperx. It is pretty much complementary, is what I believe. And both on the demand and a supply side, I think it fits well. Number one, I think all these liquidity providers, the capital is getting pooled in. So the custody of that capital needs to happen. So somewhere we need to kind of have that capital. And then there are on the demand side, so there is basically a on-chain fintech, and there is a traditional off-chain typical fintech who needs fiat capital, right? So if you are giving that fiat capital, so you need to off-ramp. So obviously that's where it is required, and they also need the fintech company also need to repay the capital on a regular basis. So that bridge or a service provider for that particular activities can be taken care by company like Copperx. And on the top of that, if you look at it other way, the Copperx also could become like a on-chain fintech for us, right? So ultimately, you guys are doing cross-border payments, and on the top of that, like corporate credit card, all those kind of activities. So in both ends, like especially the cross-border payment, T+3, T+2, T+1 kind of credit gap is there, 1 to 3 days kind of a gap. So that needs to be fulfilled, right? So for you to kind of do the at the back end instant settlement, and like a lot of these cross-border payment companies use credit to kind of do the instant settlement. So the Qiros of the world, like the marketplace, they can pull in the capital from the stablecoin investors and give it to like a stablecoin neobank like Copperx. Another way is like for a corporate credit card, again, like the settlement with the payment provider or payment partner like Visas and Mastercard, that also needs to be done. For that also credit is required. So in simple words put in, so when the transaction is to happen, so Copperx can become like a service provider, and on the top of that, whenever you act like a on-chain fintech, you can also leverage credit from this kind of marketplace.
Okay, okay, so that makes sense. And so I think we are mostly talking about like marketplace right now, right? How do you decide, like a credit score or like a risk assessment? Like, how do you do that? Like, do you have an algorithm for that, or like do you partner with somebody else?
Yeah, I mean, like we have in-house expertise also, how to kind of evaluate the risk. People who are like professionals who have worked in this industry for a while, they understand how to evaluate the risk. So in simple words, what happens is you ask for the data. Like you as an individual, you apply for a loan in a bank, you give your salary slip and like bank statement and all. In a similar fashion, whatever these fintech companies are, they have their loan book, like whatever the loans they have given, that particular entire data set, the audited balance sheet, the bank statements, your debt profile, all sorts of data, which is very confidential and which is very unique to that business's nature. And again, like a public data, if they have raised equity, if they have raised more debt from other players and all of that. You consider all of that data, and there is a standard process which is defined in the industry. This is not that we are reinventing the wheel and figuring out how to kind of evaluate. All these methodologies and processes already exist in the TradFi world. But at Qiro, what we are trying to do is how do we stitch that, the intel from a TradFi, and use it to post the results on chain. So in simple words, we are doing the off-chain compute of the data in a privacy-preserving fashion, and we are posting results on chain. That's how we are kind of thinking of solving it. But in a longer run, things could be done much better if everything is on chain.
Okay, so So I think, let's say for Copperx, right, like let's say if you look at like down the line 5 years or 10 years, right, how does that look like?
I mean, like, let's just say 5 years, 10 years down the line, if you assume that the data of a fintech bank is on chain, their entire loan data, their balance sheet, and everything is on chain. So probably the only barrier right now is because the data is off chain. It is extremely difficult to evaluate and understand what to do and what not to do.
Correct.
But if everything is on chain and verifiable, the model which is kind of evaluating this data is also on chain.
Correct.
So then the borrower comes, they put the data and they connect with the on-chain marketplaces or the tools, and the model kind of runs, execute the model on the top of that data, and then they'll throw the results. If it falls into that particular algorithm or a model, so the liquidity can be deployed automatically their wallet. So it is as good as like there is no human intervention. At a click of a button, you get the loan.
Correct. And I think this can be very, very useful to like regular businesses, because what I have seen is like daily businesses, like they use something called like overdraft using their bank account, right? So they keep like they need operational funds, right? So I think you can also enable those things, and in a way like with Qiro, these neobanks, they can like really act pretty much similar to the way banks act, right? So you can provide like credit score based on that. These companies can get a credit card or a debit card, and based on that they can also like get a temporary credit or a permanent loans via Qiro as a marketplace, right?
Yeah, I mean, like, imagine that entire supply chain, right?
Yeah.
So you as an individual, me as an individual, like, our data is also on chain.
Yeah.
And then you go and do the purchases with these suppliers, shops, and online websites. Everything is on chain.
Yeah.
And all these small businesses are also going to the banks and financial institutions like fintech to get the credit.
Correct.
So assume that this entire value chain or like entire ecosystem is like everything is on chain. So probably if you give a loan to a small business right now in USDC, but they have to make spends in the fiat.
Correct.
Right now. But if the every entire supply chain like end to end like is on chain, so probably they can also leverage stablecoin capital, right? That essentially means it is easy to evaluate, easy to kind of underwrite, and easy to deploy that capital.
Correct.
So
Correct.
that's when the stablecoin real value will be understood by anyone and everyone in the world.
Correct. I agree. It totally makes sense. And by doing this, like all the businesses, irrespective of where they're based in, they become global plus like 24/7. They can operate 24/7.
Yeah, I mean, so right now what happens if bank will get closed by 5 on Friday, so whatever will happen on Monday.
Yeah.
That's not going to be the case. Like at any given point of time, you upload data, things will happen automatically, and you can enable the limit or credit.
Nice. That's pretty useful. I think in that way, like with Qiro for sure, like I can see a version of on-chain banking coming through where like businesses can use exact same set of features but fully on-chain, 24/7, open, without any borders, right? So I think that for sure makes sense. I would like to dive into into like which markets are you tapping into, or you're seeing a demand of this particular product.
So right now, I mean, like demand and supply side. So the liquidity side, especially, so we are just focusing on US, UK. That's where most of the liquidity sits, and that's comparatively matured market, especially for a liquidity side. So western part of the world, and especially US, UK, and all those regions. And from a borrower side, like a asset origination side, there is a huge demand globally. So we have demand from Singapore, Dubai, US, Thailand, UK, all sorts of countries, because there are fintech companies who are solving specifically local problems with a lending solution. So all these lending companies are looking for a debt. So they have problem. They have either they can go to a local capital sources like bank, hedge fund, credit funds, and they source the capital, or else like they can onboard themselves on marketplaces like us and access this capital.
Okay, understood. And if we talk about, let's say, number, like if we go deeper into the numbers, right? Like, so what is the TAM that, like, how does that look like?
I mean, like, as far as the lending market is concerned, it's a huge market. I mean, like unlimited kind of a stuff, but especially according to the World Bank's report, so the MSME credit requirement globally is around $8.1 trillion. And out of which, if you look at just the emerging market requirement is $5.3 trillion, I guess. I
Wow.
might be a little wrong, but like, yeah, it's $5+ trillion kind of a requirement. And just for the APAC region, it is almost 50% of that, $2.5 trillion kind of a region.
Wow.
And if you look at how much of a credit gap is catered out of all these requirement is around $480 odd billion, which essentially means approximately 5% problem is solved of that entire $8 trillion MSME
Wow.
credit market globally. And the 95% problem is still up for grab. But that also doesn't mean that all the assets and all the requirement is of that high quality and like qualified demand, but still there is a huge market to kind of
Correct.
tap.
I think the overall, like the available market, let's say even if we remove the TradeFi part, it's more than like $5 to $6 trillion in total.
Yeah. And
That's
especially I'm talking about MSME
yeah,
credit. Yeah.
that's pretty big for sure.
Yeah.
Yeah, that's pretty big. And I think I would like to ask you like what are the top three use cases that you see you will be able to enable with Qiro, like or maybe people should build on from your point of view.
I mean, like for a Kiro's like first use case which we are launching is like, how do we fill the gap of these corporate credit card fintech companies which are on-chain credit card fintechs or off-chain credit card fintech doesn't really matter, but they have that credit gap
Okay.
where they need a capital to make the back-end settlement with the Visa for the discounts and stuff. So that's the first use case. The second use case is this cross-border payment companies. Again, like they have a short-term credit, 1 to 3 days, 1 to 5 days kind of a credit gap.
Yeah.
That's the broader range, depends on different companies. So they also need a capital to kind of do the settlements. So that's the second use case. And the third one is like a classic use case where the off-chain traditional fintech companies which are in business loan, invoice financing, inventory financing, revenue-based financing, different kind of financing businesses. So they obviously need like a fiat capital. So that is the third use case.
Okay. And like in terms of opportunities, right? Let's say if there is somebody who wants to build and tap into few opportunities. So what do you think one should build? Like maybe a couple of examples of that too.
Yeah, I think the biggest one is like, in general, this on-chain private credit kind of a space, on-chain lending, especially around the RWA industry.
And that's
RWA
already
financing.
you are building, right? But like
Yeah.
somebody else, if they want to build it, like what do you think would be top three ideas for you?
Yeah, I mean, like I'm saying that this is going to be like a top one. Like, how do you identify those good assets?
I have a tricky question for you. If crypto vanished tomorrow, what would you do?
I think the first thing which I can think of going back to the job, because crypto is interesting, and the reason I entered into this space, it is the era where it is exactly like the era 20 years back when the internet was booming and like there were a lot of opportunities to be done.
Yeah.
So all of a sudden you see that there are no more opportunities, nothing to be done. Go back to the job.
Yeah, yeah. So let's go for a rapid fire round.
Okay.
USDC, USDT, or any other stablecoin?
USDC, because the kind of business I'm into, I think regulated stablecoins is of most importance.
Okay. Do you pay your friends in fiat or stablecoins?
These days, stables, earlier obviously like those Google Pay days are gone.
Okay. One founder or company you deeply admire in this space?
I think the Rain card,
Okay.
it's a corporate credit card
Yeah.
fintech. I think they are actually solving the real problem.
Nice. Your favorite chain to build something in stablecoin space?
I think again Ethereum, because everything relies on liquidity. Most of the liquidity sits over there.
Okay. Which one do you think is the most underrated blockchain?
Underrated blockchain.
Yeah.
I think I would like to skip this one.
Okay.
Yeah.
Yeah. Which Web2 company do you think will issue their stablecoin next?
Stripe,
Okay. And non-fintech
Reliance.
from India?
From India, Reliance, and probably not from India, like outside India, maybe Amazon or Walmart.
Okay. I have a follow-up question to that too. Okay, so predict the headline. First, Fortune 500 company pays dividend in USDC.
Oh, Okay. Maybe Tesla.
Okay, good one. Okay, so I think yeah, that's it for today. Thank you so much for joining us, and really, it was fun listening to you. I learned a lot of good things from you today. So yeah, thank you.
No, I mean, like, thanks a lot again for inviting me on the podcast. It was fun, and it was an interesting conversation for sure. Hope it will be of some use to the audience for watching this.
For sure, it is. It is for sure.
Yeah.
So thank you so much for joining us today, and see ya in the next one. Thank you.